hit all-time highs or test all-time highs, and we in fact did that. So that did allow us to take some profit in equities on demand. We had some reverse arc condors and volatility plays that were sitting right in the middle as they stretched higher, gave us about $1.50 a profit, did it again, gave us another $1.50 a profit. So over the last kind of 2 weeks of trading, easy way to collect a couple of dollars credit. I think net credit was probably around $3.50 between the SPY, the diamonds, and the Qs. And I had said on Monday, I'm a little concerned with where we're going for higher highs because of this look on the weekly. This is the one thing that's a little concerning. I know this chart's a little messy, but mainly I'm focusing on the subgraphs. So we have higher highs in price, but we have lower highs in momentum and lower highs in relative strength, as well as coming off of overbought conditions. Therefore, I'm a little squeamish to get aggressively bullish at this stage. Doesn't mean I expect to have a big correction, but I do expect the market to possibly stall. If it rolls over a little bit, that's perhaps understandable. But it's going to be interesting to see, obviously I can't predict the future here, but would we see the market, dip a little bit and then rally to all-time highs, and then we dip a little bit, rally to all-time highs? Are we going to start to see some behavior like this, where it looks like, everything's okay, we're still carving out all-time highs, but if you look at the structure, it's a rising wedge. Now, rising wedges work one of two ways. They can either break that structure and fall back to where this wedge started, which would be a correction, right? Or they can break and just keep going. And that would be the blow off top and the capitulation that would be fun to follow, and then protect the heck out of your profits in case we have a bigger correction coming later. Okay? So, of course, I don't know. Pre-market, everything's up today just a little bit. Futures market, let's take a quick peek. I think GameStop came back to reality. I was looking at oil, gold, silver. I looked at copper this morning. Copper's actually had a 23% move. I didn't get a chance to play the copper futures the way I wanted to, or get the fill that I wanted, so I unfortunately missed out on that. But silver is crushing it. We're actually up another 30-40 cents pre-market on SLV, which should allow me to take some full profit on my 27 by 26 credit spread. Futures-wise, up a little bit on the Dow Jones, 0.04, S&P up 0.08, NASDAQ 0.16, gold up almost 0.5%, silver crushing it, 1.67%, and frickin' go, silver. You can go. You go, girl. I think that's Raven, right? That's a Raven. No, I want silver to run. I think the measure move at 34, 35 bucks is good. I was looking for SLV to do the same thing. Oil, stabilizing. Part of me was looking at oil today. Let me go to this chart here. If I go to oil futures, I mean, I could put a credit spread on possibly the 77 by 76. Okay, possibly. I still think on my oil chart, and I said this for the last couple of weeks, I don't think there's any reason for me to force a buy trade in the middle of all this in case it gets a little messier. But a credit spread never really hurt anybody. It's defined risk, so I can let it do its thing. If we're going to break and go higher, let me see what this would be on USO or oil futures. If this was 77 on US oil, or USO rather, so USO behaving a little bit more like a stock, this would probably be like a 70, maybe a 74 by 73 or 75 by 74. But I think futures is probably the way to trade it if you want to make a few more bucks. I can see what that's trading for right now. Let me get logged into my platform. And had an interesting day yesterday. Grabbed a little single day butterfly in the SPX that I did make over 100% of the position, but man, it offered a lot more than that. I took a screenshot at the end of the day. Let me see if this is shot. I know the numbers are small, but I'll just read it off to you. SPX, and I put this little $5 wide butterfly. I only did that because it cost me 25 bucks. Actually cost me 30 bucks. So I paid $30 for the move. This was at the end of the day paying $1.90. $1.90. Now, granted, I was within $2 of my actual pin price, which is how I got that profit. So it shows the mid at 235. So realistically, I should have been able to close out for that trade around $2. I didn't. The trade, an hour and a half before closing bell and grabbed 65 cents. So, making 35 cents out of a 30 cent move per contract, that's 116%. I'll take that anytime intraday. But it's obviously exciting to have, let's say the bid is $1.90 out of a 30 cent move. How about making 630%? Pretty freaking sweet. But you had to be dead on. Why did I guess that? Why would I put that trade on? Because I've got some software that lights up with these gamma levels and some of these big open interest levels, and the SPX was showing me 5,300 all day. Started to fill up more and more and more. The SPY was showing me 530 as well. Actually, it was slightly lower than that, like 520. What was the level yesterday? Around 529 yesterday, and they both hit them hard at the end of the day. So it was really, really nice to get that trade. Like I said, I protect the profit on it. That's fine, but no complaints on turning 30 cents a contract into 35 cents profit, right? All right, let's go to oil futures, and then let's give an official shout out and good morning to everybody. Steve, good morning. Ruth, good morning. Ruth Ann, good morning. David, good morning. Jacob, good morning. Gary, what's happening, sir? Catherine, Willard, nice to see you. Denise, good morning. All right, good morning, everybody. Have you all here. Very nice, very nice. Oil futures, if I wanted to go out to 30 to 45 days, I probably opt for there's a quarterly expiration here in June. Let's just see what it looks like. Let's go CL, should be oil futures, right down here. Here we go. Light sweet crude. See where my cycles can go out. So I can go out 28 days or 61 days. Let's try a 28-day cycle and look at the feed again. So I want this to be below around 77. I think 77 by 76 is tightish. That's still within the expected move. If I did a simple credit spread, I don't love the risk reward. I'd collect 15 cents on the futures contract, make about 140, 150 bucks, risking double that. If I wanted to move it out of the way, I'd collect less, but let's see if we stayed below 76.50. That's about a third of the strike. So you're collecting $130 on a $5 wide move. What would that be? If it was 130 divided by 500, about 26%. That's about right. And that level is pretty decent. If you had a 76.50 as your kind of line in the sand, that is below both of these recent lows. So that's not a terrible play, but do I like it enough to take the trade? I don't think so. Probably not. Keith says Scotty Scheffler was arrested trying to get to the golf course earlier. Something about trying to divert around a trap. Pretty sure Scotty Scheffler will still make the tee time. Maybe it's all a big misunderstanding. Let's see here. Reckless driving. Handcuffed by police before the start of round 2. Oh man. They've got him in the jumpsuit and everything. Wow. Well, this is kind of wild. So I didn't even know that.